Hello everyone, I'm going to explain the test that I took in the morning session. Give me a second, I'm going to share the screen. So this is the two entries that I took in the morning session, New York session. The reason for the entry is just because of daily candles. Give me a second, I explain everything to you. So this is the last Friday closing candle. It is a really nice sweep. This high has been taken, this high taken, this high has been taken. This is the breaker point. So price getting swept. So I expect the lower prices at least to this area. This is a big fair value gap created last week. So I like to see the price come back and replace this fair value gap, or at least to this level. So that is why I was bearish today. I directly went to 1 hour. Great bullish leg. So if you enter this point, I can draw back everything. So it's kind of messy. I don't want to show it. Just keep it clear. So this is the price action. There's a good consolidation around this point. This is a structure shift in 15 minutes. It's not actually a structure shift. It might be a structure shift in 5 minutes, in 1 minute, 3 minutes, but not actual structure shift in 15 minutes. This is the 1 hour. The parallel gap get flipped here. Why? At this point, the time is 3 o'clock Friday. So I like to see lower prices at least to this equal lows. So I directly went to 15 minutes. Here I can plot all those things which I marked in the morning session. So this is the consolidation area, clear accumulation. I take this is the structure shift, low, high, structure shift displaced to the low. So this is the fair value gap created aligned with this breaker point. So I mark this fair value gap, and this is a good consolidation. So I like to see price expand all the way up to this fair value gap, take all those highs and give some sort of sell model in order to go for sell to expect this equal lows to run. This is my projection in the morning. So as soon as the price approaches this fair value gap at 6 a.m. in the morning, I directly went to 1 minute. Here it gets interesting. So this is M15 and 5 minutes fair value gap. I just overlapping two fair value gaps here. So as soon as the price take out this area and gives instant rejection candle, kind of engulfing candle, put a low, fail to make a higher high, gives the structure shift with good fair value gaps. So I entered my position. I'm not literally waiting for this fair value gap to fill or this fair value gap to fill. I just entered my position at this point in one prop firm and at this point in another prop firm because I was very confident the price is going to go low. Since I was bearish from the higher time frame, especially the daily sweep. And 15 minutes fair value gap reaction made me think I I should be bearish today. So it's just a clear structure shift, clear displacement. So I entered my position right here and one more position. This is the dumbest entry I can execute ever in my trading career. I never suggest this kind of entries. I'm not patient enough to wait the price rebalance to this level. My entry should be this point and stop loss should be this point. I like to see this fair value gap to hold. If any place close above this fair value gap means I'm going to be wrong. That's it. This is my game plan. This should be my game plan every single day. But in this entries I take one entry here, and one more entry exactly at this parallel gap rejection. I add one more position right here. My stop loss is not here. Kept my stop loss right there. I'll give really good breathing room today. It's almost 8.75. It's not a very big deal. So I keep my stop loss right here. So price come all the way down, start pushing back to the upside. So I never mind about this big fair value gap. The optimal thing I can do is I need to wait for this fair value gap to ran first in order to go for sell, not to add pyramiding positions. But I'm not wait for this to happen. Instead, I add position after I see some rejection candle at this point. I entered some positions in my different accounts. This is my first entry. This is my pyramiding entry. So every entry has been failed. Every entry has been stopped out here. Here I get stopped. I lost almost 0.5 percentage in every profit account. I trade today three different profit accounts. Then I just wait for more structure to form. I went to 5 minutes. I literally wait for more structure to form. As soon as the price go and take out my stop and come all the way down and continue to hold this point like low, low, low. As soon as this low getting broke with displacement candle, I entered my position right this area by putting limit order into not exactly three different accounts and keep my stop at this level. I like to see continuation to this equal low, this equal lows. This is my target. But price did exactly opposite to my projection. Price just skyrocketed towards my opposite to my drawn liquidity. I was totally confused in the late evening. I just I just opened my laptop and watch what's happening in the today's session. It was completely opposite to our projections. I was totally confused. Why? Because high time frame it's sweep. I like to expect the lower prices and good reaction inside the 15 minutes earlier. It's sort of get flipped, but instant rejection. So I just wait for this swing low to close below in order to go for entry. This is a really good structure shift, good firewall here. I'm not putting any limit order. I'm not putting any market order. I put just a limit order, and it ran through all the way up. Ran out, take out my stop at this point. At this point, I made one more dumb decision, which is nothing but I can explain that in 1 minute. So I keep my limit order at this point. It's got executed beautifully. But the thing is, as soon as the price approaches this high, it gives big displacement candle. It gives big displacement candle. The genetic liquidity has been hunt now. So I was super bearish today. So after some time, I opened my positions and I saw my two profit account hasn't been closed and has been protected, but one profit account closed due to some slippage issues. So I was getting tempted and entered my one more position right at this point. At this point, keep my stop loss at this level. Why? I'm not happy with that stop because I keep my stop at this point, but before price reaching this level, it stopped me out. Two profit accounts running, two profit account position running. Uh, it 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 was not closed at that time, but this position got closed. I was not get convinced with myself. So with this issue, so what did I did is I just re-entered my position at this point. It is clearly a revenge entry. It is clearly a revenge entry. It's sort of seems like a good, like my stop loss hasn't taken. After approaching this point is flushed down, big farewell gap. I entered at this point, keep my stop loss at this level. If I need to be bearish, it should hold and continue to go lower. I expected I still bearish, but what just happened today is this internal getting swept. Ecolos not attacked yet. It's generating liquidity. Ecolos swept. There is no displacement. There is no structure shift. Nothing yet. Comes down. Comes down one more time. Goes up. This is the structure shift. This is the structure shift. This fair gap holding the price close above this level. All those area. More. If you see this, it's obvious, right? Internal getting swept. There is no structure shift. There is no displacement yet. If any candle close displays above this, then probably the drawn liquidity going to be higher. This might be the lowest liquidity run. That what it exactly happened today. Getting swept, big displacement back up. There is no structure shifted. This is the last swing that's put in place. So before that happened, this swing got broken to the upside. Structure shift, this parallel gap getting build up, induced, big push to the upside. Take this significant low and 5 minutes. If we go to 5 minutes, it should be a significant low, right? Yep. Yep. So we can set this might be a structure shift, this might be a firewall gap to go for buy. Or else we can enter after the big displacement through this level, through this high, we can enter our position. It's not actually filled, right? It's this firewall gap hasn't filled. It's a breakaway firewall gap. So okay, what's the mistake today happened? Why I'm wrong today? Everything has been explained clearly in the 1 hour. I deleted all those noises. I purely go to 1 hour and explain what happened today's session. It's it's nothing but actually there is no structure shift in 1 hour, right? Now to go for sell. And this firewall gap kind of ran through to the downside, but there is no displacement through this level. There is no breakout in 1 hour. There is no displacement through this swing lows, whatever you can call. And this is the breaker which align with this move, which align with this firewall gap. This if you mark this breaker, the price continue to hold and also gives a good reaction to the upside. And this recent fair value gap, which created it's a minor fair value gap, but it's still holding the price. I just going to delete this to give you good perspective. So this fair value gap getting flipped here, but there is no displacement. I see the breaker. It's beautifully hold, not only hold but also give some reaction. Good push to the upside, and the price created a fair value gap right here. See the how the price reacted here. This fair value gap created in the morning session, especially 8 o'clock in the night. The entire candle formed right here, not even close below this fair value gap. See the body, rejection body. Mm, mm, Not even a single candle close below this fair value gap. I failed to notice this. I failed to notice this. This is the mistake that I made today. So price come all the way down. This fair value getting flipped, but there is no getting close below, but there is no displacement, and the breaker continue to hold the price, give some reaction. That newly created fair value gap holding the price beautifully and holding the on the pushing the price all the way up to the drawn limit, up to this point. This is our target. So if it is obvious, right? It is just a continuation trade. Fair value gap get ran through, but there is no displacement breaker holding the price, give reaction, gives a good displacement. Small fair value gap holding the price. No, not even a single candle close below this level. Everything has been a rejection. So the draw most probably going to be higher. So obviously it's going to take my it's going gone it's went to the upside and take my target. This is the first leg and this is the second leg. Now if any candle close below this fair value gap, we can go for short model for tomorrow's session. To this might go all the way back to the daily fair value gap. This point. So if we see any price close below this level, we can expect a sell model towards this area, especially this midpoint, which align with this big fair value gap, right? It already filled. So we can take this. We'll see. Tomorrow I need to be sell sweep comes below. I have to see some structure shift. Lot of reactions. That's everything for today. Bye bye.